So, I honestly believe that we're living through some historical times. You know, when people talk about they were here during the last financial crisis, I think we're really like right in the midst of something extraordinary, something crazy. It's like it's about to happen, and there's like water blowing up the dam, and then the dam is about to basically break and just explode. So, First Republic Bank. So that's what I want to talk about today. Let's get into it. So First Republic Bank secures a 30 billion rescue from large banks. So essentially today, a group of 11 banks made a $30 billion unsecured deposit in First Republic Bank. So these banks had to come together to actually backstop everything that's going on. Something I I think we should be a little bit wary because something is obviously going on here. Like, if there wasn't a systemic risk, why would banks be coming together to do this? This is not looking very pretty. So, JP Morgan, Citigroup, Wells Fargo put $5 billion each. Goldman Sachs, Morgan Stanley put $2.5 billion each. Mellon, State Street, PNC, Truist, US Bank put $1 billion each. But it's just strange because it's like, if this is happening to FRC, can't this happen to the other banks? And like, what's going on? Like, if somebody knows where the US has its stop loss, the point where it starts losing, they can trade to that effect. So they want to trade to that result so that people get liquidated just like this. So they could see that FRC probably had limited liquidity, and as a result of that limited liquidity, everybody start to draw out their funds. People probably start to short the stock as well. As you're shorting the stock, I heard a CEO say yesterday that bank liquidity can be directly related to the stock price, right? So if you have First Republic stock price kind of going to the downside, that's where the bank can almost not pay their depositors. So First Republic dropped $20, so they were in like big trouble. They probably could not cover the deposits, and then it's looking like when J.P. Morgan and the other companies decide to build this fund essentially for the failing bank, we had a huge pop up to around where 40, and that's on the 5 minutes. We had a huge pop up to 40. Yeah, with a huge pop up to around 40, and it came back down, settled at 34. So the bank is up with all of the banks basically coming together and defending. Like, what's going on? And then next week, we're having an interest rate decision, and it's looking like either Powell does 25, which shows that he probably. This is a hard question. If they're looking to push down inflation more, you do zero point 0.5. You do more 0.5, that can cause a bigger risk to other banks and other instruments, because other people will have these long dated assets such as bonds in their portfolio, and if the Fed raises rates a bit higher, that can lose the value of the bond, causing them to not have or take a huge amount of unrealized loss. And if you have like, you have to spend cash now for some reason, it gets tricky there, right? So this is FRC. An important chart I saw here was this, where they were showing the uninsured deposits and the deposits that are loans or held to maturity, meaning they can't instantly get these money. So these money are there out there, but they're not able to just sell everything, right? If you have held to maturity securities, you can't sell these until the year comes. And then if there are loans, you can't just liquidate a loan. And if you just liquidate a loan, you might be just taking a loss just to make the loan work. So I'm seeing the next one is Western Alliance Bank. And let's find that because that's looking like the next shoe to drop. Wall. This might be the next shoe to drop. This can be a short target. This can be a short target Because if they know that if this company pushes down, if this company pushes down, it's not going to be able to cover the deposits, right? But let's talk about why we usually come here, which is the QQQ trades, right? So, what did I do today? Today. Let me put this on London time. Where's the time? Um, so 13. This is generally 1, but it might be a little different with the London time. So 13 and 15-minute chart. I'm trading on the 15-minute chart. So 13. 1336. Okay. So what we had here was a bullish engulfing candle. Was that the only trade for today? No. So the first trade was a sell, right? 1336. 1336. So I had bearish engulfing. No. 1336. Yeah. What's going on? Why does it look like that? 1336. Weak red. This does not look like where I would enter the trade. But I don't see an indicator, so I don't like how this is looking. Let me see if this is the right trade. The thing is, the time is messing me up, but if the time is on this candle, then I probably did trade it on that candle. But it's looking a little weird. Okay. 275, and then I got stopped out. Same candle. Yes, this trade was accurate because I remember getting stopped out very quickly on this trade, like in out same trade. So I decided to take it to the downside with my stop loss a little bit above the previous candle. That was even in the pre-market, and then I just got stopped out for $86 very quickly there. So that's what happened on that trade. That was the first trade of the day. And then the second trade was a buy. And I remember entering on a signal. So what's this? 1830, 1815. Okay. So what I did, I had a three-line strike bullish candle and a bullish engulfing close here. So I entered to the buy side on this candle, the next candle over. And then I entered at 305, 45, and then I was closed at, or I closed it at 1931 at 306.70. So this is where I entered this trade and exited there. That was our profit of 123, and the previous trade was a loss of 88. So I wanted to do these videos a lot more to see where the strategy could just line up, so I could say that, all right, if I get the signal and I also have other confluences. However, I didn't have much confluences with the MACD, like it was still red. So I guess I wouldn't even use the MACD at this point. So this gave me mixed signals, but it was still a little bullish enough for me to take out some profits out of the market. So having these indicators can help knowing when to enter, knowing where's your stop loss, and then having a plan to exit. So all right, so that's all for today's video, guys. Like, I'm just thinking that we're living through something like, I don't know what's going on, but we have to make a move. We have to do some things, and let's be able to trade it, make some money out of it. All right, I'll see you in the next video. Bye bye.